Good evening. Australia's official interest rate is tonight at its lowest level in history. It now stands at just 1.5% after the Reserve Bank pointed to inflation as the main driver for the cut.
But banks aren't passing on that reduction in full, prompting the Treasurer to question their decision. SBS Finance Editor Ricardo Goncalves is with us. Ricardo, why is low inflation such an issue?
Anton, Janice, soft inflation means prices aren't growing fast enough to aid economic growth, and lower rates are hoped to encourage spending and investment. Back in the 1990s, the official interest rate was above 10%. Now, those days are well and truly behind us, with the cash rate steadily declining since 2011 after the GFC. Today's 25 basis point reduction puts that rate at a record low of 1.5%. Ryan Hatami bought this inner-city terrace about 3 months ago.
Yeah, we're renovating. We're doing quite a lot of work. So, we bought the place that was in a bit of a state.
It's a move to house his expanding family.
Wife and 3 kids. We were in a 3-bedroom apartment and, looking for something a bit bigger.
What's unlikely to be bigger are his repayments after the Reserve Bank slashed official interest rates to 1.5%.
A 0.25% cut probably won't make too much of a difference in our lives.
That's because rates were already at a record low. If the banks do pass the 25 basis point cut in full, borrowers with a $400,000 mortgage with a standard variable rate of 4.55% would save about $56 a month.
It's not going to be significant, but of course, every cut helps.
Agents say there are signs of a softening housing market.
Right now, the days on market are getting longer on average.
But that depends on the location.
We're seeing a lot of local activity. We've seen a lot of peel-off from the foreigners.
The RBA isn't worried, saying that the likelihood of lower interest rates exacerbating risks in the housing market has diminished. That's because banks are more cautious in their lending, while some cities are heading toward an oversupply of apartments in coming years, putting the brakes on house price growth.
The Reserve Bank cut rates simply because inflation is super low across the economy
and is expected to remain low.
I think the Reserve Bank will want to get ahead of the deflationary threat or falling prices across the economy, and that means for the potential for further rate cuts down the track.
Leaving a little more cash for other things.
Every cent will go into more work around the house, basically.
Now, one by one this afternoon, the Big Four banks decided not to pass on that 25 basis cut in full. Westpac cut the most, but it has the highest standard variable rate of the majors at 5.29%, and most of them will wait for at least 2 weeks before passing on that new rate. The opposition says the RBA is doing all the heavy lifting for the government, while the Treasurer maintains the bank should pass on the cut in full and notes some depositors will benefit.